The yellow metal has been always linked with human history.
Digital investments in gold, right? So a lot of younger people are now starting to make digital investments.
It's also how central banks measure the value of money.
Oil prices were going up, so many people, they have shifted their investments from gold to oil.
To tell the history of humanity is to tell the history of gold and vice versa. The yellow metal has been always linked with human history since at least the 6th millennium before Christ. Most importantly, the precious metal has been used as money in most societies for millennia, facilitating trade, enabling economic growth, and serving as an unrivaled store of wealth. The yellow metal has been the primary and perhaps even the only form of money for millennia, precisely because it is a reliable form of currency that maintains its purchasing power over time. In early 2026, prices peaked at a new all-time high, reaching $5,626 per ounce, driven by several factors: massive central bank purchases as part of the de-dollarization process, record inflows into gold ETFs, and escalating geopolitical tensions. The war in the Middle East, followed by the closure of the Strait of Hormuz, led to a massive reassessment of global inflation expectations. This, according to experts, is one of the main factors behind the precious metal decline. Following the January peak, market sentiment changed dramatically. Gold prices began to decline rapidly in March and consolidated at $4,600 per ounce by the end of May, a 12.5% decline. However, since the beginning of June, prices have accelerated their decline. During this period, the precious metal has already fallen by almost 9% before rebounding after President Trump announced the end of war with Iran.
We're at Damas Jewellery headquarters.
Welcome to Damas.
Thank you. And this is Mr. Anantanarayanan
Yes, thank you.
Hariharan.
Yes, yeah.
So since then, prices have been fluctuating.
Yes.
So what do you attribute it to? So what's the reason, you think? Is it the war, or is it just normal process for gold prices?
I think from whatever research is telling us and whatever we are hearing and whatever our own experience has been, there are a few factors that influence gold prices. Typically, and this is the time when we've actually seen gold do differently from that past behavior. Typically, equity markets and gold have always been in opposite directions, which means that when the equity market goes down, gold goes up because it becomes a safe haven for investment. However, this time around, that's not happened at all. And that's a very, very surprising fact because markets have also gone down. Gold has also gone down, right? So I think it's been a double decline, if I was to call it that. We see this having happened because of a few reasons. One is that I think over the last few years, institutional buying of gold by countries has dramatically increased. That institutional buying has led to a higher demand for gold over the last 2-3 years especially, which has pushed up the prices of gold significantly. Now, during the last few months, one of the notable events that has happened is that some of the countries have started offloading their gold reserves. You would remember Poland. You would remember some countries being quoted in the press as having offloaded a few tons of gold. Now, when you offload a large amount like that, a few tons of gold, it causes a shockwave in the market because that amount of gold in one go entering the market causes a depression in basically the demand, right? It's an oversupply situation, but these countries are doing it for liquidity. So I think that's one of the large factors that has caused the volatility. So whenever that has happened, the prices have plunged and then they've started correcting. So you see that as a cycle that is starting to establish. The other thing that we believe has started causing this is the macroeconomic problem overall, or the geopolitical problem, if you call it that. The situation in the Middle East and in other countries is now starting to weigh down on the way many countries are looking at their own security, safety, and economic independence. So gold is playing a large factor in they're looking at how they want to be economically independent and secure against the dollar. Because up till now, many countries have been holding dollar reserves. So they're trying to basically move away from dollar reserves to being able to hold reserves in gold. That's playing a large part in the way gold moves now. It's become a commodity that has been traded. It has got the same kind of volatility as other commodities. Gold has never gone through such a lot of volatility historically, right? So that volatility is coming from the amount of trade that is actually happening. The third thing that we believe is retail investments in gold has also dramatically increased. You've seen digital investments in gold, right? So a lot of younger people are now starting to make digital investments in gold. Now, these kind of investments are small to start because at an individual level, I'm making a small investment. But the sum total of the number of people who are making investments is now dramatically larger. Therefore, and if you look at most portfolio managers say you should ideally hold between 5 and 15% of your portfolio of investments into gold, right? Now, that means that a lot of people are looking at gold and investing in gold. That is also causing the kind of movements that you see. So I see that as being a variety of reasons that impact the final price of gold: supply, demand, geopolitical situations, retail demand, and a whole host of other factors.
Gold has been struggling in recent months as the war with Iran has significantly disrupted the global energy market, sending oil prices skyrocketing. Higher energy prices are stoking inflation fears, and markets are now looking for the Federal Reserve to raise interest rates rather than cut them. According to experts, gold price movements in the near future will depend on the duration of the conflict in the Middle East and its impact on global inflation.
Does and will the war significantly impact the global gold prices in future? In the nearest future?
Well, in the short term, yes. But if I would say in Q3 or Q4, it will not impact it that much anymore. Other factors like central bank buying or central bank selling are the more driving factors. And also the Fed interest rates are usually the biggest drivers for the gold prices overall. And wars are only provide like a short-term influx. Yeah.
Mm-hmm. What are your projections for gold prices by the end of this year?
So we have a company policy where we do not provide prognosis. We are sure that the gold price will traject to the upside in the long term, just because of the way our monetary system is programmed or established through central bank money printing. All our currencies that we use are degrade in value over time, which is what we have observed in the last 20, 30 years. So I'm not giving a prognosis for a gold price until by the end of the year. But in the long-term trajectory, gold will always rise. Or the better way to think about it is actually as the years progress and we're still using the same monetary system, our current fiat currency, they will degrade in value. Gold is always the baseline, and that's also how central banks measure the value of money. They just measure how much it degrades compared to gold, which is the most healthy baseline.
What do you think? Will it cross 6,000?
Likely. Yeah, very likely, yes. Yeah, very likely, yes. We've had between 20 and 30% annual gold price gain. Last year it was even more, I think. So since COVID, on average, I don't have the precise number, but on average, 30% annual gain for gold since COVID, pretty much. And this trend is looking to continue.
Gold, basically, it is a product which goes up whenever any uncertainty is there in the market. or in the world, and any kind of crisis comes, then the gold price goes up. But here, actually, as because this Iran, US, and Israel war happened, so because of Iran, they closed the Strait of Hormuz. So that is why the scarcity of oil and gas was there in the world, and oil prices were going up. So many people, they have shifted their investments from gold to oil. So that is why the gold price has temporarily come down. But I personally feel that gold price will be up very soon, because this is a temporary war scene, and as soon as it will be over or any ceasefire will happen, then gold price will again started coming up. Not only the oil and this thing, as a matter of fact, the relationship is there. Like whenever the interest rate goes up in US, then also the gold price comes down, because the people, they shift the investment from gold to that thing. So ultimately, it is where the people, they are getting a better return. So once there the interest rate goes down, so the people, they look into the safe haven like gold, where the return is better and it is absolutely a liquid asset. So then the price start going up. So it is not only that oil and gas. Temporarily, we are connecting it with oil and gas because the market has shifted from there. And I think a lot of countries now, they are trying to remove the this thing from the US dollars. So the demand of US dollar might come down. So then the price of gold will again go up. So it is because of that also, because many countries like China, India, and other countries, the government is buying a lot of gold. So once that kind of buying will come, ultimately the gold price is going to go up. And otherwise also, gold generally beats the inflation. So I think because of this situation, the inflation will go up, and gold always beat the inflation. So I personally feel that the gold price will start rising again.
The trend in gold trade is that when the prices go down, people normally don't buy. They buy when the prices go up. This just before the war started here in the Gulf, the prices have reached their peak.
Correct.
But with the start of the war, prices went down, then started fluctuating, they plunged. And surprisingly, people were not buying.
That's correct. Yeah.
So how come the war is defying this trend, or there is a new trend?
Well, yeah. So when the war happens, it's potentially causing other investment assets to lose money. And the good thing about gold is it is a very liquid asset. So the gold market is very deep, and you can find a buyer for gold in any market situation. So gold is usually a very easy asset to sell in any sort of liquidity crisis, whereas other assets may not be as readily available in a need of selling. They can be bound, or they have like a running time, and they can't be sold that easily. So gold is then often used first, like in the big markets, for a sell-off to get the needed liquidity, and that's how the price drop since the peak can be explained. Another reason also for the steep rise is there was an accelerating curve, like the global market saw the prices rising, and it attracted a whole wave of new clients who were entirely new to gold. They saw the steep rise, and they considered it to be a good opportunity to enter the market. Essentially a fear of missing out on further price gains in the future. And when these new clients then saw the market not rising much further, or like even stagnating or falling, those new clients were also then again very quick to sell again. And now we're currently in a situation where we don't know if the gold price will correct down a little bit further, which is a possibility. So currently we are in a phase of a little bit lower market activity.
The normal trend in gold sales is that when the prices go down, people don't buy.
Absolutely.
They start buying when the
Only if
prices
the prices start going up.
But at this point, at this time, I mean, something strange is happening. People are not buying. People stopped buying.
Yeah.
Why they are so confused? Is it the war or is it
So if you
something
look
else?
at, I may not be able to comment entirely on global, but what I could say is that the main reason seems to be that there is a worry from an economic point of view for each individual, right? The point that you just mentioned, saying, I am worried about my financial status. There are job loss worries that are there. There are recessionary fears in some countries. There are inflationary fears in some countries, right? Especially in some of the countries where fuel reserves are going down, people are worried because fuel costs are going up, right? So with all of that happening, I think consumers are basically saying that, listen, I would like to buy, but I would much rather save my money for what might be another requirement that might come up. So that premise will still play itself out. That until the worry that the individual has goes away. See, because at the end of the day, let's face facts, gold is not a necessary spending at all. At all.
Investment.
It is investment. Now, for investment, what do you need? You need extra cash. And that becomes the main problem there, saying that how do you say that consumers have extra cash to spend on investments at this time? I think that's the main difference that you're seeing. People are worried, and therefore people are holding back.
Both retailers and wholesalers in Dubai's famous Gold Souk report some 50% decline in sales since the start of the war. Even cash-in-transit couriers who daily collect cash from shops have confirmed this, saying that they merely collect half of the volumes they used to carry before. Traders also attribute it to the reduced flow of tourists who made a significant part of gold buyers in Dubai.
Tourism inflows have contributed a lot to all industries, including the jewelry industry. If you look at places like Gold Souk, they have been significantly dependent on tourists. I mean, there are malls also that I can quote, Dubai Mall, Mall of Emirates. They're significantly dependent on tourists for their business. Now, the tourism part of the business has taken a hit. Notably so, and understandably so because of the current circumstances. We've been listening to the government representatives, we've met with the trade bodies, and there is a lot of work that is being done by the leadership and the government in order to bring tourists back. And we're confident that that will come back. But as of now, that's a problem, right? So it is affecting the overall spending in retail and in jewelry for sure, right? The second part of this is basically the locals. And the locals are now starting to get worried about the situation continuing, right? At a personal level, I myself am worried, right? Because I've never been in a situation like this. But I have full faith in the kind of leadership that the country has displayed, the kind of leading from the front that we have seen in this country, and the kind of dramatic efforts and steps that they've taken in such a short period of time. Having said that, there is still this niggling worry and anxiety in people's heads. And that is manifesting itself in people wanting release. Now, if you go to the malls, right, you see malls still being crowded. I'm sure you will see the malls still being crowded. But what you see is eateries are full. Retail shops aren't full, right? So people are spending on small release. And I'm sure you would have read about this thing called the lipstick effect, right? Where people spend on small joys, right? So eating seems to be a lovely small joy for people. I myself indulge, right? When I feel like, I need a release, food is a great way of looking at release. And I think that's becoming a normal behavior here, at least from whatever I can see. And this is a personal observation. But people are still holding back on spending on things like fashion, entertainment, or jewelry, for sure. We are not seeing that kind of a spending happening. People are holding back. People are downsizing. So that's the way that we are actually seeing the current behavior.
There is some estimate that sales went actually down by half.
It's different for different kinds of people. I think if you look at And I'll speak from our store network. We have stores in the souk area where we are significantly dependent on the tourists. So any retailer who's dependent on tourists, the impact has been much more than half. Right? Our stores have had that problem. But when you go to the local residential malls, right, where they are catering to a closed community catchment, there it's not been that bad. There is where you are probably 50% or upwards of 50%, and therefore the averages work out to somewhere thereabouts. But yes.
How is it for Damas?
Similar. At an overall level, we are similar. In terms of the hit on the business, I think the main impact has been people walking into our stores itself. And that has, like I said, manifested itself differently across different geographies and different types of stores. I think for us, we are also blessed that we are present across multiple countries, right? So we are actually seeing ourselves performing differently in the Kingdom of Saudi Arabia, for example, where the impact of the overall situation is significantly lower, right? Because UAE and Bahrain and Kuwait have been hit much harder.
Saudi
is huge, and one end of it, which was Riyadh, was possibly affected. The northeastern provinces were affected, but Jeddah and the other provinces have not been affected. So we are in a way seeing a differential performance in Saudi compared to the rest. So we are actually managing overall through this method of averaging out. But if you look at standalones, I would say yes, the half impact is still there.
So how is the business has been since the start of the war?
We are not only trading, we also have a related business that engages in storing. And the business moved from the trading more to storing, like shipment and transportations. Our business offers vaults, insured, independent from bank vaults, where customers can deposit their precious metals. And we also experienced quite a bit of selling in the trading market, like customers selling off gold because they could transfer the funds potentially out of the country faster to use it elsewhere. But also a lot of customers have contacted us with the request to transfer gold from one of our vaults to another vault.
Like within the country or outside the country?
No, so we only maintain one vault per country. In Dubai, there is one. And other popular vaults from us are in Zurich, Switzerland, and Singapore. Mm-hmm. So there was a little bit of a gold outflow from our storage customers out of Dubai to other vaults in Singapore or Zurich.
So the prices keep fluctuating. So what do you expect when the correction will be? Does it depend on the war, or it is independent from the war?
To a degree, yes. If the war continues and the oil prices keep rising, other assets, they likely lose value because of low economic progress. And this is then where gold will find a resistance from where it will then move again to the upside. But currently, we're still searching for, if the new resistance for gold is a little bit more lower than here or not. Mm-hmm. We still have moderate activity from our domestic resident clients. As you can imagine, we're a little bit, the foreign investment is currently reduced. Our customers are currently choosing to buy and store in other vault locations. So for the situation in Dubai, we are currently serving more of our local resident clients. But the business is slower at the moment, but it is also steady.
Mm-hmm. And there are losses? There are losses in business?
Losses, you always have, we don't have losses. We have better months, like January and February were exceptionally good months, where we overperformed by a vast amount. So it's completely normal that there is also months that are slower. Currently, we're in a little bit of a slower market period, but this is historically, I'm 13 years now in this industry. So this has always been the case. Every year there is a slow phase and then a stronger phase.
How much is the business down? I mean, in terms of percentage?
So that is a hard number for me to pinpoint. I would not even say that the business being down is accurate. Like in 1 month, we're selling more, and in 1 month, we're selling less. Yeah. So, yeah, at the moment, we are not selling as much as February or January. And what also needs to be considered here is that we're in Dubai. We're only in our 3rd year of actually operating. So it's hard for us still to get like the baseline because we still have the growth from new resident clients. And we have onboarded a lot of new resident clients in the last year. So it's comparing the revenues between this time last year and today, it may not be like totally representative because we still have an influx of newly onboarded resident clients. So in that sense, the business is not really down. We're just selling less than in better months.
As far as the retail market is concerned, or a general public who is coming to buy the gold in the market, they have stopped buying, or they have reduced buying because they were thinking that the price is coming down. So they were just thinking, okay, let the price come down more, let the price come down more. So slowly and gradually, and now again, because the gold prices have started going up, so now a lot of people, a lot of retail buyer is coming. They are buying the gold jewelry, or they are buying the gold bullion and all. So that is why the gold price again, they have started going up, and people also, they have started having their more interest towards the gold. Because Dubai is a very big tourist market, and because of this uncertainty, because of the war, a lot of tourists, they are not coming. But previously, a lot of tourists, they used to come, and because Gold Souk is a kind of tourist destination also in Dubai, so now that customer has gone down. So that also we are losing the sales accordingly. Yeah, I think almost 30%. Because a lot of tourists, they used to come and they buy gold, and Dubai is the biggest gold market. And otherwise also all over the world, Dubai Gold Souk is very famous, I mean, any tourist comes, so amongst the tourists, this is an agenda to go and see the Gold Souk market. And of course, when they come and see the Gold Souk market, they buy also. And everybody knows that in Dubai, the gold is the cheapest amongst all the countries in the world. Yeah, so as far as we traders are concerned, or we people who are there in the gold market, who are already sitting on a physical gold, it doesn't make much difference to us whether the gold price goes up or it comes down. Because we are already invested in the gold. We just see that, okay, how much gold one person has already invested in. So we have to make sure that we have minimum that much quantity always with us. We are not supposed to let it go down. I mean, suppose if somebody is having, let's say, 100 grams of gold with him, he will always remain at least with the 100 grams. He cannot let it go down. So whether it goes up or whether it goes down, it does not make any difference to us, because ultimately the gold price is going to go up. So that is the advantage here. So it does not make any difference to the traders whether the overall price of the gold has gone up or it has gone down.
Gold's sharp correction this year may be unsettling for investors, as experts say.
What do you think? When the market will correct itself?
I'm not a crystal ball gazer, but if I was to kind of express my fervent wish and hope, I think, we're heading into the summer, and everybody knows that the summer is a time when people don't actually manage to kind of open their purse strings very well. There's a lot of travel and everything else, and therefore it's typically lean season beyond a point. We are hoping that as soon as summer comes out and we head towards September, October, November, December, which is the last end of the year, we really hope that this situation would have resolved by then, right? Both from a point of view of the geopolitical uncertainty, as well as from a point of view of stability in gold. Exactly the point that you mentioned, because the two are linked, right? And the two are very significant driving factors for a business like jewelry. Very many manifestations of that have already started happening. For example, if you see in the last 2 months, exactly the way you said, investment-led demand for consumers has gone up for us. So people are buying more coins and bars, right? They don't want to buy jewelry, exactly the way that you said. So obviously, in coins and bars, there's only so much money you can make. The business cannot sustain selling itself on coins and bars. We need the normal demand to come back, right? So those kind of things we are hoping, correcting themselves by September. And therefore, we have a good end to the year, and therefore a very good platform that we start the next year on. And in fact, if you look at us as an organization, we are actually not only hoping, but we are preparing for that to happen. So a whole lot of work that we are doing right now is preparing for us to come out and actually be ready when we actually hit September. Because we are clear and we are confident in the measures that the leadership of the country has announced and the kind of confidence that they're giving us. We believe that the situation will be resolved. But like I said, it's hope and belief. I do not have a way of predicting it with certainty.
I know you don't have a crystal ball, but what are your projections for the future of gold prices? Let's say by the end of this year.
I rely on research reports, and like I said, I don't have a crystal ball, right? I read up as much as I can to try and keep myself abreast. But from whatever reports one is reading, I think the ranges that people are predicting, most analysts are predicting, is anywhere between $4,800 a troy ounce to $5,300 a troy ounce. They've brought it down. Earlier, there were a few people who were talking about $6,000 a troy ounce.
Exactly. I mean,
I know. But
some
that's
people
now,
are sure that it will cross 6,000.
Maybe. But I think the number of people who are saying that it will reach or cross 6,000 has now started coming down. People are now indexing to the fact that currently we are seeing it being stable in a $4,500 to $4,700 per troy ounce kind of a range. There is not significant factors that is influencing any upward movement on the long-term horizon. So until that starts, it'll be difficult for it to gain the kind of velocity to reach 6,000 is my feeling. So, like I said, 4,800 to 5,300. Majority is saying that, so I'll go with the majority.
Yeah.
When do you expect the recovery? I mean, I know you don't like to give prognosis, but at least approximately.
A recovery to the latest high that we had, like in January. So in January, as I said, the market was, when it rises too fast, a lot of people get in. And then when it doesn't continue, there is also a bunch of investors who are selling, which is then potentially a smart move. Yeah, like very experienced traders will have noticed in January that the gold price was rising way too steep, and that it is also healthy and normal that the gold price can enter like a correction. Yeah, so investors who have been holding gold or accumulating gold in the last 5 to 10 years, and if they had seen this sharp increase in the gold price, so these people would also be selling, and that would have been a smart move. We don't particularly advise or recommend trading these swings. For us, for us personally, it's a buy and hold recommendation, just because of the long-term trajectory of our monetary system. And I personally expect the gold price to fully recover by the end of the year, is my personal opinion.
What do you think? Should people still invest in gold?
I think it's a great idea for two reasons, right? I think I don't think investment is the only angle. I think gold brings in a sense of preciousness, right? And I would like to talk about jewelry specifically. I think jewelry means so much more to people today because there's a lot of emotion attached to jewelry, right? Previously, exactly the way that you said, people used to think of jewelry as only investment, right? The function and the form were not important. The weight was important, right? You bought so many grams of jewelry. Now I think the function and the form have become very dominant. I'm sure you will be looking at a piece of jewelry from the way it actually sits on yourself. How does it go with your clothes? How does it make you feel? How does it make you feel perceived? Right? So the change from the identity of jewelry of being an investment destination to now being in the eyes of the woman and also men. Men are also accessorizing themselves with jewelry in some form or the other. Of course, gold is a little bit of a problem there, but other metals like titanium, platinum are making their way. So we see that as becoming stronger and stronger, right? The second thing that I believe that will happen is with the price of gold increasing, I think people will start looking at upgrading using old pieces. Right, you bring back your old piece.
Yeah, Damas
You
is doing
exchange.
that.
Yeah, you exchange, and then you. So we have one of the best exchange policies in the market, and you exchange your old piece that you bought from us, and you upgrade to buy a new piece. So people are no longer looking at old pieces as something that they need to maintain, because even women today say, "Okay, I used to wear that 10 years ago. I don't think I want to wear it anymore."
Yeah, and there is fashion also.
Absolutely, right? So you bring it back, you upgrade yourself to become more trendy, more current, and you use your old gold as a currency to pay for it, right? So that's becoming the newer norm, the newer behavior that we are seeing. So I think it will still prevail. Gold is a very, very precious spot in the heart of a woman, right? Because she feels she's precious. The people who love her make her feel precious, and gold makes her feel precious. So I think the combination is beautiful.
Is it the right time to invest in gold?
It's always the right time to invest in gold. The best time to buy gold was always yesterday or last year or 10 years. And in that sense, there is never really, while we live in this current monetary system, now is always the correct time. And a better time than now was always yesterday in the long-term perspective.
Yeah, so like we have seen basically a paradigm shift in the investment in gold. Like previously, people, they used to come and buy the gold casually, or their requirement, some marriage is happening, or they want to give it as a souvenir to their employees or to their relatives in the festive season time or something like this. But now, as because they have seen that the gold prices are going up and up and up, so now people, we have seen that their basic thinking in investing in the gold has changed. Now many people, what they are thinking, that out of their income, out of their salary, they are taking out some amount, some fixed amount, and they are regularly investing in the gold, because a lot of uncertainty is there in the market, and they know that the best bet and this is the safest haven to make the investment. So that is why a lot of gold investment is coming. So I will just advise the people that whatever money they have, their own money, they should invest that money in gold. They should not take any loan, or they should not take any leverage if they want to buy more gold. Suppose if some person is having 100 dirhams, he should buy the gold worth 100 dirhams only. I mean, I'm just giving an example. So if somebody is thinking that if he's having 100 and he can buy the gold worth 1,000, then it can create a problem, because it is a fluctuating price. So one should never get into that kind of thing. Gold is a very good investment, no doubt about it. And ultimately, in the long run, it is going to pay. I mean, it is really going to beat the inflation also. And gold, otherwise also we call it that it is the father of all the currencies. So whether it is dollar, euro, or any other currency, ultimately gold is above everything. So anybody who's invested in gold, obviously he will always be in a better position.
South China Morning Post reported that US-Iran tensions have significantly disrupted logistics in the Middle East, leading merchants to shift physical gold reserves from Dubai to Hong Kong. Because traders are eager for quick liquid sales, this rerouted bullion is currently being sold on the Hong Kong markets since April at steep discounts of 15 to 20% compared to global benchmark prices.
There are rumors in the market that the gold hub trade status is slowly moving to Hong Kong. How true is that?
Well, so that's not. There is a big gold market in Hong Kong. That's always been the case. But for us personally, as a group, Singapore was always more relevant than Hong Kong, actually. And Dubai, when we came to Dubai in 2022, Dubai has been the most emerging gold market, also from the perspective of bullion trading. Like, we do not trade jewelry, we trade the investment gold. And Dubai was establishing itself as the most up-and-coming market. And personally, I believe that Dubai will retain that status after a year. And I expect everything to be back to normal.
Mm-hmm. They also say that Dubai's status as a gold hub is slowly moving to Hong Kong. What do you think about it?
I don't think that's going to happen very soon. If at all there is a trend like this, I think it'll change over a period of time, but very slowly. I see that as being affected by two reasons. While Hong Kong as a tourist destination is in a way kind of going to try and compete with Dubai, I see Dubai as doing things very differently and very aggressively to be able to maintain its position. And therefore, the so-called destination that it's trying to create from itself or for itself will continue to remain. It may even grow stronger in the short time because, see, many countries are very well connected to Dubai. Yeah, there is very good relationships and bilateral ties that countries provide to each other. For example, India, for example, Europe. These countries have a very, very strong affiliation to Dubai. Right, there's a lot of expats staying here, so they know the country very well. The country has a good reputation back home. I think that is not going to change very easily. So I see that position being maintained. The second thing is, I think with the amount of strength that the industry has here today, jewelry industry specifically, there are very many stalwarts. I can name a few, but I'm sure you know, who have been here for time, right? They know consumers. They understand consumers. The degree of nimbleness and agility that the industry here has, I would say, is excellent. The kind of responsiveness that I've seen in some of the players that we are seeing in the market, excellent. Now, when you are faced with people who are so cued into what the consumer wants, people who are so in touch with what the consumer wants, you will see the situation correcting itself favorably faster. I mean, I can tell you many examples, and the investment in coins and bars is only one example. We saw people suddenly flooding themselves with coins and bars within a very short span of 7 to 10 days when this happened. I can talk about even earlier when I came in, right? We talked about a trend of color stones. Suddenly, within a space of 2-3 weeks, we saw stores having a lot more color stone based jewelry. That kind of having a pulse of the market, responding, is something that will hold out very strongly for a while. So the combination of these two factors, plus I think the government will do its best in order to make sure that the city of gold remains the city of gold. And we are confident, therefore, that the industry status is going to remain for a while.
I have been traveling to a lot of other countries also, and I have seen, and particularly in Dubai, I have seen this advantage that Dubai is a very, very safe country. And that is why I think the gold business is really flourishing here a lot. And that is why the gold prices are also very cheap over here, because here the safety of the gold is not an issue. And everybody who has been living here or even the tourists who are coming here, they know that Dubai is a very safe place. So I think Dubai is the best place for the gold.
Experts warn of the risk of a further decline in gold prices due to a combination of factors. However, with a favorable outcome, the precious metal has a chance to set a new high by the end of 2026. Meanwhile, the global gold supply will see a modest growth in both mine production and recycling, as gold demand is projected to decline following the double-digit losses in jewelry. It is expected that central bank purchases and increased investors' appetite for bars and coins will replace jewelry as the largest component of demand for the first time, while the annual average gold price is forecast to surge by 43%, according to the latest analysis and projections from Metals Focus.